having, say, maybe a 1% write-off due to bad debts, and you have a increase in interest cost by, say, 100 basis points or 200 basis points, then I think the first would be more preferred.
Mr. Sethi, you are always at the receiving end of the stick, so to say, per se, the government at large. I'm sure there are some points in which corporates would come and laud you as well, that, you know, this is a step well taken, so on and so forth. In the last 6 months, 9 months, there will be something that you would have done, I'm sure. I mean, lots that you would have done that you would feel you have done, but lots that even companies would have come and told you that these are good steps that have been taken.
I mean, again, coming back to the fact that a lot of units which were not starting their production, last 6 to 9 months, the units which have actually commenced commercial production, that figure is very high, and especially the kind of companies that we are talking here, which means again that government is able to provide that kind of infrastructure. When you say infrastructure, it starts with the land. Land is provided by say industrial development corporations most of the time. We also facilitate the various kinds of clearances. I absolutely agree with what Dr. Mitra says. There still are a number of clearances or approvals that we need to give, but then we have tried to put it under a single roof, a single window kind of a system where this helps. I think this helps entrepreneur the most. That is when they come and say, well, we thought it would take so much time, but you know, it got happened actually in 2 days. So that is where I think one reason where the government interface has become better. But the other part is that some kind of escort services, where especially the investors coming from other countries, investors coming from other states, we probably need to, with the help of other stakeholders, which could mean FICCI, which could mean CII, which could mean other stakeholders, we could probably have a more streamlined system of providing those escort services, whereby this whole value chain, so to say, everybody knows at which stage what has to be done and how it can be done. I think that is where we need to work a little more.
All right, I'm sure you will. Last couple of questions actually, and you know, actually to both Puneet and Roopa as well. You know, I was looking at some corporates which, say for example, got listed in 2004, 2005, really small companies with annual turnover, of over 100 crores, let me put it that way. And you know, one thing that some of these did was to make some smart acquisitions and thereby catapult to higher levels. And I'm just trying to get a sense from both of you, if you've probably experienced this, that by and large, some small and mid-sized Indian corporates, are they a bit reluctant to probably go out and take that leap, a giant leap in their case, in order to go to the next league? I mean, simply because of the fear of failure?
By and large, I think it would be fair to say that M&A activity, especially overseas M&A activity, has been confined to the top corporates. Right. I don't think smaller and medium enterprises have looked in that direction as yet, not because of any worry or concerns, but I think that the India growth story is absorbing enough for them at this point. Mm-hmm. Whereas the larger companies have gone abroad and gone overseas for a series of reasons, you know, whether it be diversification of markets, whether it be access to raw materials, whether it be increase in scale, and all of that, you know. So I think I wouldn't say that the SME sector or the mid-sized corporates haven't looked overseas because of a lack of confidence, sure, but rather because the India growth story has been all-absorbing for them.
Okay, Puneet.
I think to add to that, I think that's absolutely right. I don't think we've seen a very large number of M&As. I think the ones that we have seen, particularly at HSBC, have been very opportunistic. Companies that have actually taken over either buyers or suppliers who are facing financial trouble overseas. And to ensure that the company in India's operations have continued uninterrupted, they've actually taken the opportunity of acquiring the overseas buyer or supplier. But I think the point that's being made is quite relevant. There is so much growth that is taking place in India itself that's all absorbing. You know, it's really receiving all the attention that it should deserve.
Sure. A final word, really. You know, how accessible, since we are also addressing companies which have a slightly larger presence than 200 crore, 250 crore kinds of the size that we're talking about, how accessible and how important would be the availability of funds, not just from the banks, but also through other routes, because that had also dried up considerably in first half 2009. How important and easy would it be for companies to do that?
I think that's a very, very good observation that you made. I think part of the problem that we had, there are three broad sectors that actually, or three sources of funding, or four sources of funding that companies can access. There's the traditional banking sector, there's the capital markets, there's the external commercial borrowing sector, and there's the mutual fund sector, companies particularly in the debt side. And I think if you look at the crisis, 3 out of the 4, with the exception of banks, which slowed down a little, the other 3 sectors actually dried up quite significantly. And what we are now seeing is all 4 of them actually coming back. You've got a capital market which is reviving quite aggressively. You've got the banking sector which is flush with liquidity. You've got the exchange fluctuation that's now working in favor of going out and borrowing dollars, and that source of supply has started to pick up quite nicely. And then you have the debt mutual funds that are now looking to support the corporate sector. So I think we're back in a situation where there is a lot of money available, but as they say, the credit does go to the credit worthy. So that's something that you will always have to remember.
Right. Since you had that complaint, I'll end it with you. I mean, are you actually seeing that aside of the bank credit that is available?
No, I don't see very much, except the big size companies who has access to capital market and other sources. Otherwise, mid-size, from our definition point of view, have only one source, and that is banks. I don't see any other. But that is
improving, isn't it?
That's good, but by and large, they are able to meet all the requirements. The mid-size companies, the small-size companies, if they are frank and open to the bank, I think by and large, as what Mr. Puneet has said, they see the potential of the business, the intention of the customer, and on that basis, they are quite open and liberal.
You are being the polite, disgruntled customer, I see.
No, I've seen my bad time also.
Sure.
And that is the time when banks were not looking at me at all. So
sure.
That is why I made that comment.
All right. Closing remarks, anybody? I mean, just broadly, your overall sense of where we are and where do we go in the next 6 months to 1 year?
I think I'll just repeat what I said earlier. I think this has been a great learning experience, and one that actually fills me with a lot of confidence because of the manner in which the corporate sector and the Indian economy has actually responded to what was a pretty severe crisis by world standards. And what amazes me is how quickly all of us, if not most of us, have actually forgotten how deep the crisis was. You know, we now look back and almost see it as a very distant image. But I do remember 6 or 8 months ago, it was pretty grim. People didn't know, or a lot of us didn't probably have an idea as to how the whole jigsaw would sort of unravel. And here we are 6 or 9 months later thinking life is going on as usual. We're probably going back to levels pre-crisis in terms of not just growth, but you know, various other indicators. But I think it is important for us to remember some of those lessons. And the one big lesson that I would sort of focus on is liquidity. It's not about profitability, it's about liquidity. It's about maintaining the cash that is going to be your lifeblood, that's going to be the one thing that's going to be able to help you sustain all the ups and downs in the economy.
Mr. Sethi?